Can you notify me by typing DTMM? DTMM. Can you notify me by typing DTMM, everyone? DTMM, everyone is supposed to type DTMM before we start. Before we start today's session, can everyone type DTMM? DTMM, everyone, before we get on with it. DTMM, few more people remaining. Few more people remaining. Okay. Thank you. Thank you for notifying me, for showing that you are here and you are active. So what we're going to be doing today, today's topic is the weekly analysis for the GU and the GJ for the past week, that finished, and for the past cycle. So without wasting time, let's start on with GJ here. So we'll be analyzing GU and GJ for the past week thoroughly. What was the previous cycle? What cycle were we in? What level we ended in? All those. What possible trades could we have taken, and what trades did we actually take as DTM traders? So first things first, let me remove the boxes here. First things first, we come to our H1 here. For what? For directional bias. That's the first move, to look for the directional bias, which is done on the H1 time frame. So we are here on the H1 time frame. This is the recent cycle right here. This is the recent cycle right here. This is the recent cycle here. So what do we see? We see that the previous cycle was in uptrend, which ended uptrend. We had an uptrend starting from Monday right here. This is our psychological support and resistance. Our psychological support and resistance here. Let me put it in black. Psychological support and resistance, everyone. Yeah. So we're currently in an uptrend, like on the beginning of the week, Monday. On Monday, we're in an uptrend. So counting our levels, we firstly see that we had on Friday the previous week, that's when our peak was formed. The peak was formed on Friday, but then it was confirmed and locked in on Monday during the Asian session. Yeah. And this also means, let me use a different color here, by the 13 and 50 crossover here. So this also means that currently when the peak is confirmed and the peak is logged in place, it means that we are now in level what? Level 1. So marking out our level 1 up to here, up to this price level. This is what we do. So for Monday and Tuesday, we are in level 1 because price was ranging in the same level, on the same level. Then for Wednesday and Thursday Asian session, no, let's put it here for Wednesday only. For Wednesday only, that's when we were in level 2. How do we see that? We have our confirmation here for our crossover here. The 250 cross. That's how we confirm that we were in level. That's how we confirm that we're in level. We're in level 2. That's how we confirm. All psychological support resistance here indicated by this black line. So we're in level 2, right? So after level 2 comes level 3. Using the Asian station box, you notice that our peak was locked in here on Thursday. That's when our peak was locked in. So how do we know that this was the peak? Well, using our ADR, it clearly does not show us that this was the peak. So this shows us something else to be talked about soon. Just the reason because, as you can see here, that our 3 times ADR here was 407 pips, but then the number of pips that was moved in the previous cycle was 368 pips. So this simply means that the cycle is not complete, guys. The cycle for GJ is not complete. The cycle for GJ is not complete, and something is about to happen. I'll talk about that. So using levels and EMAs, we can clearly see that we're in level 3. This is level 3. This is level 3. And that's our peak. I'll pick it right here. This is our peak here. This is our peak. This level 1, this level 2, and this level 3. Using EMA crosses clearly confirms that these are the perfect levels. And as you can see also by this trend line break here, that the cycle was over actually. It was truly over. So moving into the new cycle that was formed, you can see on Friday now, you can clearly see that the price did not continue to go up, and using the market structure, you can see that the market structure is broken here. The market was giving us higher highs as we were moving with the levels here. It's giving us higher high. There is a high here, and there's a high, and high. Then suddenly just started giving us higher lows. This was a higher low here. Not only did it give us a higher low, it also gave us a lower low here. I'm assuming you can see this getting right here. It's gave us a high here, then give us a higher high. No, the first high was here. High, then give us another high. Just kept on giving us high, and another high was here. Cannot write because of that annotation box. So it was giving us high highs, then suddenly it started giving us lower lows. So it gave us a high here. Then suddenly it broke, the market structure is broken, and it started giving us higher lows. No, lower highs. Sorry. Low high, started giving us low high. This was a low high here. So this means the market structure is broken before our confirmation for the peak being logged here. The market structure is broken, and it shows that the trend had changed, and we're now going in a new cycle, and the cycle was dropping, and we're now supposed to be having lower highs and lower lows. As you can see here, it was also giving us, this was a low, it was a higher low, more higher low. You get the drill, guys. You do get the drill. And there's a higher low here. This was the last high low. Then after the market structure was broken and the price gave us a lower high, it then also gave us a lower low here. It also gave us a lower low there. So this is the confirmation that we're now in a new trend. We're now going in a new direction. And the cycle is now dropping just like this. It changed the trend. The trend changed. It was confirmed by the market structure and let me show you one also thing that shows us that the market is now changing. This thing here, you know what this thing is called? Divergence. When the peak was formed, it gave us divergence. So after divergence was mapped out by the price, we clearly know that we're in level 3, and after we're in level 3, we're now expecting to go into level 1, which means we're now selling. And for level 1, we do not trade against do not trade towards the peak, meaning from level 1 we never ever trade to the peak, in the direction of the peak. Never trade towards the peak. Take trades to the buy. These trades are a no-no. In level 1. So long we're in level 1, we do not trade towards the peak. The peak is here. This is the peak here. This is the peak. This is the peak. And we are not supposed to trade towards the peak in level 1. Keep that in mind. So after that, one more confirmation also. One more confirmation. We see that there was a peak lock here. 1850 cross. The price was locked. It's locked there. So this confirms that this is level 1. We cannot box it out. We are not even supposed to box it out because it is not formed. The price was still moving in this range. So we need to confirm first if it was going to continue in this range or it was going to move out of this range to the upside or to the downside. So we cannot draw a box here. It's only Monday when we will be able to perfectly draw, but then we are sure that we're in level 1 because of the confirmation here, because of the confirmation of the 13 and 50 cross there. Right there. That's what makes us sure that we're in level 1. So earlier I said the ADR, the 3 times ADR had not exceeded the value, the number of pips for the previous cycle. This cycle here that I've drawn levels for had not reached or exceeded the 3 times ADR value here. So for that reason, it clearly shows us that we are going to expect a reset. And the rules about the resets, we talked about it in the reset video. You can check it out. It's video number 8 on the YouTube channel. The links are all over in the Telegram channels. You can get to me. I can send it to you directly. So the golden rule on resets is this one. I want you to take screenshot of this picture right there. Take a screenshot for it so that you keep it. You need to keep it. You can paste it on the walls next to the picture that you also took a screenshot of on the important candlestick patterns. This is the next screenshot that you should take. Reset usually happens at 800. Oh, H1 was this was supposed to, on H1 it was supposed to, okay, let me tell you. Resets usually happens, okay, it's on the 200 EMA on H1, exactly like that. Resets usually happen at 200 EMA on H1 time frame and 800 EMA on M15. Now you can take the screenshot. Now it's fixed. There was a mistake in taking the screenshot on my side. Sorry about that, but I fixed it. You can now take this screenshot now and take particular attention. Take note of this statement here, that resets usually happens at 200 EMA on H1 time frame and 800 EMA on M15 time frame. This is the golden rule on resets. Don't miss it out and don't get it wrong. So what do we see here after? After what we talked, after what I just showed you on resets, what are we seeing here? What are we seeing here? This is the H1. Firstly, this is the H1. This is the H1 there. I'm indicating there at the corner. That's the H1. And what's this beautiful structure that we're seeing here? A W on the what? On the 200 EMA. And according to that statement I just showed you, clearly shows us that we're expecting a reset, guys, and the reset is confirmed. It's partially confirmed. It's partially confirmed by the levels not being completed by the ADR account. So this simply means that for GJ, for particularly GJ, price has to reset until the number of pips of that cycle reach or exceed the 3 times ADR value. That's the goal. Or even goes on to further give us more risks and continue to exceed the 3 times ADR. Price can do whatever it wants, or it can even not proceed to reset. It can continue to give us more levels, get back into level 2 and then reset later on. It can price do what it wants. Market makers move the price according to their own rules and for their own reasons. These are just precautions for our side, on the strategy that we use here, and these are just confirmations for our strategy. So always we need to put our stop losses, we need to take care, we need to put in our risk in place, calculate our risk, and then we just trade. But with how many times this has played out, we are sure, and we are 80% sure. That's how we trust. That's how I personally trust this strategy. A reset is going to be formed here on Monday into the following. So the only confirmation that we are now waiting for is a reset is also known as a peak. So for a peak to be confirmed that this is actually a peak, for a peak to be confirmed, we need to have a 50 and 13 log, just like this one, just like this one right there, just like this one. Yeah, that's the confirmation that we only need right now. If these two EMAs cross over each other at this point, we are sure that this is a reset and we are now supposed to trade it up to the upside. So for our trade setups, we then move on to our M15. Back on that statement again, we said it's either the reset happen either on the 200 EMA on the H1 time frame or on the 800 EMA on the 15-minute time frame, and this is what has happened here. Very beautiful, and it's our original W here. So we are quite sure that the reset is to be formed here. So what we will be expecting from Monday, we'll be expecting for price to give us our confirmations first, because otherwise, if there are no confirmation, this simply means that we are in level 1, and in level 1 we do not trade towards the peak. So after confirmations are given, That's only when we now start to look for trades. And what are the trades? We are now looking for stop hands to the low side, then we trade it up. I hope you get me there. If you don't, this video will be on the YouTube. You rewind it how many times so that you get what I just said. This is in preparation for the coming week, the Christmas week. So we need to also be careful, because there will be a lot of manipulations and the market makers will be on holiday, so we might not experience volatility at all. But 30 pips, our 30 pips will be waiting for us. That's one thing for sure. So I hope you get what I just talked about on this particular pair, GJ. On GJ, so the M15. So according on Friday, the trades. So M15 is now the time frame that we lower down to for our entries and for our setups. To look for our entries and our setups. That's what we do on M15. So on Friday, what were we supposed to see? There was this, yeah. Stop onto the stop and high, trap, yeah. Then shift. Then after price shift, what did it do? It then went on to close below what? Below the 13 and the 50 EMA. So our first trade was supposed to be here. Though this one was a bit more aggressive because our EMAs had not been cleared, all of them. We still had 200 EMA in our way. So we actually were supposed to wait for the 200 to also be cleared. And as you can see, the 200 EMA was cleared here. So the second trade was supposed to be here. After this candle here. That's when after this candle close here below the 200 EMA, that's where our second trade was supposed to be taken to the downside. Because what? In level 1, the peak had been formed, the peak had been logged, and the first trade would have got you plus 50, over 50 pips. Then the second trade would have got you over 40 pips. So all in all, your number of pips were 90 plus 90 actually. It's plus 90 plus 90 plus pips. Those are the number of pips that one was supposed to make using our strategy TTMM on Friday. Isn't this a lot? There's not very few, guys. These pips are a lot. They're not easy to get, and you cannot do them. You cannot easily get them without using our strategy DTMM. So that's what's up. So this video is only on GU analysis. I'll make another video right after this one on this was only on GJ. I'll make another video on GU. So right after this one, there's not going to be a break. There's not going to be a break. So just stay tuned for the next video. So I'm going to open the chat box for questions, for you to ask your questions.